Hey everyone, Anthony Venuta here with In Touch Mortgage Solutions. It's Friday, Finance Fridays, and thank you again for tuning in for another episode. On this episode, I want to talk about red flags that you should be paying attention to when applying for a mortgage and how they may impact you on your approval or pre-approval. Stay tuned, we're going to dive right in. Once again, I want to take this opportunity to continuously thank all our supporters and viewers of the channel, for everyone leaving their feedback, comments, questions, and concerns, and suggestions for future topics. We appreciate everyone's feedback. Always remember, if you found this video helpful, to like, share, and subscribe, as this information gets out to many Canadians to help them improve their ability to apply for a mortgage and get approved. On this episode, what we're going to do is talk a little bit about some of the things that, as a mortgage professional, we see and that lenders are addressing when going through the process. So we're going to start off with point number one. Now, point number one is working with family. Now, working with family is definitely okay. We're never going to say, no, you can't work for family. But when it comes to applying for a mortgage, it's a little bit different, as the lenders look at it in a different way. When applying for a mortgage and you work for family or relative, what they want to see is a 2-year consistency or 2-year history that you've been gainfully employed with your family. And that's because they're going to generate that income based on it. It's not just a letter and 2 pay stubs. They're going to be looking at your T4s, potentially your T1s and NOAs to make sure that there is a consistency with your employment. So they will look at bank statements, all your income. It is a little bit more rigorous, especially when you work with family. But having this discussion with your mortgage professional ahead of time in order to present that information to the lender and make sure that you're going to be okay and you're going to get approved is important. Point number 2 is payday loans. Now, although payday loans have a purpose in our economy for some Canadians who need short-term financing or loans in order to get them through to their next paycheck, you don't want to have these type of items on your credit report when applying for a mortgage. So it's usually advisable that you do not, or you pay off those types of loans. Even though they can help you rebuild or reestablish some credit in the short term, lenders will perceive it differently, and it doesn't necessarily always benefit the client. So payday loans, you want to make sure that if you have any of these cash advance, payday loans, type of predatory lending, that you definitely get those paid off, or at least speak to your mortgage professional about your particular situation. Point number 3 is overdraft mismanagement or credit mismanagement. And basically what that means is when you're going through the mortgage process for approval and the bank may be requiring you to provide them with bank statements or history of deposits, you do not want to be in a position where you're in a negative or overdrawn position. They are looking at that. They will ask questions potentially to see exactly how you're managing your funds. Also, when it comes to credit mismanagement, is making sure that your credit limits are well below your actual credit limit, as well as they haven't gone over. And that is something that the lenders will pay attention to. Not only does being over limit or close to your limit impact your credit, as we've discussed in other videos, but it also may indicate to the lender that you mismanaged that credit card, and they may ask you to close that account or that credit card as part of the process for approval. So you do want to keep that in mind before applying for a mortgage. Make sure all your credit cards are in good standing. Point number 4 is taking out new credit or loans prior to applying for a mortgage. Now, it goes without saying you do not want to be applying for a new car, as it is a monthly liability, or any type of loans, for example, like for furniture, or applying for a new credit card, giving you more exposure to higher credit facilities or amounts that you can borrow. Lenders will consider this when looking at your credit report, as well as what they see on the report when it comes to the credit cards. Now, sometimes credit cards will help you increase your credit score, as well as, improve your ability to maybe manage some money, as we see clients basically going into these 0% interest promotional credit cards to help pay off higher interest rate credit cards. And lenders are aware of all these things, especially if you're going to be carrying that balance into the mortgage, as well as in through the pre-approval process. That is something to pay attention to. But generally speaking, you do not want to apply for new credit prior to your mortgage, as that will also impact your credit rating, as hard pulls generally do trigger the credit report differently than, let's say, a broker inquiry. Point number 5 is large deposits. Now, generally when the lender and the broker are going through your transactions and your history, maybe to look for the down payment, understand your employment, your deposits from your payroll, you do not want to have large deposits on there. Now, although this is unavoidable, depending on your scenario, if maybe you've sold a car, maybe you've had a bridal shower, a stag, or maybe you had a wedding, and there's a large deposit that goes through the account. Obviously, it comes down to having this conversation with your mortgage professional in order to make sure that you're able to backtrack and trace those funds. That is something that's very important, because large cash deposits that are out of norm for your regular payroll will be something the lender sees if they ask for the bank statement, and something that you need to address with your mortgage professional ahead of time. Point number 6 is lack of regular savings. Now, generally speaking, when applying for a mortgage, obviously you're going to have a down payment, you're going to have a deposit, and what the banks want to see is an additional cushion on the side that in the event something happens in regards to the house, or maybe your employment, you need maintenance, something's amiss, they want to see that you have a little bit of money put aside. So having a little bit of a cushion is very important when applying for a mortgage, especially if you're at 20% or more down, and maybe your servicing or debt servicing ratios are at limit, and you're trying to get an exception, or the broker's trying to get an exception. They will look at certain things like, does the client have some money put aside in order to carry them through a few months or 6 months or 12 months of mortgage payments if something happens. So making sure that you continue to save your money, not put all your money into the down payment, and keep some money on the side, is going to help make sure that you're not house rich and cash poor. Point number 7 is employment irregularity. And this is very important because obviously we're seeing this come up a little bit more often now, as the last 2 years have been, for some people, a lot more challenging than for others. Maybe you've changed jobs, maybe career paths, maybe these lockdowns had impacted your income. Maybe, your year-to-dates on your pay stubs don't necessarily annualize. Maybe you're guaranteed hours, but we're locked out of work. There could be many different reasons why there could be an irregularity in regards to your income, as well as to your actual employment. And having this conversation with your mortgage professional ahead of time is definitely going to be worth its weight when applying for a mortgage, because the last thing you want to do is basically have someone who's just looked at the information and taken it at face value, not asked any questions. Because as I said, especially if you started recently in the last few months in that new job, and even if your salary, there are questions that will come up. What did you do before? How were you surviving prior to? All this is basically as a result of what happened in the last 2 years. Lenders are taking these things into consideration. So having a conversation about your employment, about any inconsistencies, if you were impacted by the pandemic, is always important to have a conversation about. Now, these are just a few things that we talk about. Now, I want to do a little bonus topic, and that's down payment. Down payment is obviously one of the major proponents of a pre-approval, as well as your mortgage approval. After your brokers looked at your income, your credit, all the employment details, they're going to look at down payment. And down payment is basically going to be something that's very important and integral to getting the deal approved, because you need to be able to source the deposit, the down payment. Generally, lenders will look at anywhere from a 30 to a 90-day history of the down payment. They'll basically could ask for more if required, but generally they will ask for anywhere from 30 to 90 days, depending on the lender. Now, as for large cash deposits, which we talked about earlier, large cash deposits are something that they're paying attention to when it comes to down payment and sourcing those funds. Now, generally, as I said, some clients will have their funds put into different accounts spread across, different investment tools, or maybe it's coming in as a gift. Maybe some of that money is sitting in an account with a relative. All these things are taken into consideration for the down payment, and is something that you should be having a conversation with your broker. Also, is that down payment, is it coming from a line of credit, from a gift? Are you using these funds and paying them back? All these things need to be disclosed, especially because down payment is an important part of making sure that your transaction actually funds on closing. Don't take it for granted. Down payment is a very important part of it, and having someone who's experienced with working with down payment can help you understand it and also position it with the lender. And this way you, as the consumer, can be prepared to close and what you need to do to close. So we hope you found this video helpful. If you have any questions about your mortgage, whether you're looking to refinance, purchase, or invest in real estate, anything you're looking to do, please always feel free to reach out to our team here at In Touch Mortgage Solutions. We're always here to help and lend an ear. We wish you a great Friday and an even better weekend ahead. Thank you for tuning in.